Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold market. Well, guys, yesterday the data on the real estate market, the Case-Shiller index, was not very supportive for the US dollar in general, for the US economy. Although we mostly see the moderately positive and bullish signs from this economy. That's the earnings reports on the companies, where the 70% of the companies has confirmed earnings and beat expectations of the analysts. In general, the earnings report was really positive for the second quarter of the current year. Other data also was moderately bullish. The consumer confidence index, some other data in the recent weeks. But yesterday's data was not really very impressive, and in general it was supportive for the gold. But as you can see, market has shown very heavy reaction on this, and just a lazy attempt to move higher, tested the monthly pivot point, hasn't even reached the weekly pivot point, and has returned right back down. So with this candle, you can see that the market very heavily reacts even on the positive data for the gold market. What does it mean? It means that when we do not have real purchases and real demand on the physical market, currently, guys, we still stand on our thought that currently just doesn't exist the force, the power that could trigger the upside rally and upside trend on the gold market, that could trigger a reversal on the gold market. In today's comments on the forum, I suggest you to read it. There is information that the Chinese traders tell about the dropping of the purchases in China, and the demand that has mostly appeared after the holidays start to decrease significantly. And more analysis right now start to speak about that they expect to see the markets at 1180 support. That is what we are talking about within the few recent months, and that's still our position. That's why currently maybe some volatility will appear on the market due to the Fed speech, but markets in general do not expect any surprises from the Fed comments. This probably will be the announcement of the closing of the quantitative easing program, and they will still hold with the phrase of a considerable period of time until the rate hiking. That's why hardly this will be any surprise for the gold and for the other markets as well. And we think that if market will take it out of these lows today and will move below the weekly pivot support one, that could become the triggering moment of the downward direction right to the 1180s. That's what we will be watching for during today's session. On the 4-hour time frame chart, also, guys, our opinion that markets mostly looks heavy, because take a look that market has reached the FIB support 1227. There's no significant bounce up, no retracement, no respect, just this shadow yesterday on the data release. This market mostly just creeping across the support area, just standing flat. Also, guys, take a look that trend has shifted bullish but no reaction. This top grabber has worked, market taken out of this top, but this was just the minor target, and market, as soon as market has taken out of these tops and completed the target of this grabber, price has returned right back down immediately in the same range that this was stand before that release. That looks really bearish, and that just tells that market really looks heavy. By taking a look at the hourly chart, we can't exclude totally the possible some spike to the upside, because although the action is really choppy, but here, guys, you could just imagine the shape of the possible short-term head and shoulders or something of that sort. That really could be the reason of the possible spiking right to the 1237, maybe during the Fed speech, during the announcement of the decision and the assessment of the economy policy. Just due to volatility, market could show some spikes to the upside, but in general, we mostly feel now expectation that markets are mostly more bearish rather than bullish, and we probably mostly bet on the downward action rather than on a reversal and upside action. This doesn't mean that we call you to take the short position immediately. That's just our humble opinion. That's just our expectation and what we see on the market right now, based on the market mechanics, based on the reaction of the market on the recent events, how market behaves around the supports, how it responds to supports. That really doesn't look impressive. So that's why we mostly stand on point that the chances on the downward reversal, downward continuation here exceed the chances than the possible upside continuation.